Hey everyone, thought I'd hop on and do a video here. Sorry I wasn't able to do a live stream yesterday, it just didn't work out. Some people say I sound angry on my Facebook post. I'm not angry, I just am very concerned based on some things that I'm seeing with the financial markets. I wanted to create a video today to go over some of my concerns and maybe help you better understand the predicament that we're in and the long-term potential consequences that's going to impact all of us. First of all, I guess what gives me any sort of credibility to speak on this subject? Well, after 2008 crisis, it impacted all of us. Jobs are hard to find. I had a difficult time just like anyone else, and I just didn't understand, why things were the way they were. So I went on this mission to better understand the monetary system and how it really worked, because it was never really taught to us in college or in school, especially in high school. We had basic things like checkbooks and maybe how credit cards work, but nothing how the actual system worked. And I found that so interesting because on a daily basis, all of us use this in some form, right? Cash or credit card, and we make transactions and buy things, but we don't actually understand how everything works beyond that, who controls it, why we have expansions and contractions. And so I really wanted to get into understanding what's called base currency, because that's the problem at hand that's going to impact us all in a very negative way, even much more so than 2008. So I want to make this video as simple as possible to understand. I don't want to get too complicated. So what I would like you to do, if you could, is just kind of clear your mind of any things that you thought you might knew about economics and how money works, and just come along with me on a story and use your imagination with me to help understand some of these concepts. I'm sure you've heard of something by now called the Federal Reserve and some of the emergency measures that they're putting into place, like this big stimulus package that's potentially coming out. They're going to send everyone $1,000 or family $3,000 checks. The total is somewhere around $2.5 trillion. Not so long ago, people would cringe at hearing the T word, trillions of dollars. Coming into existence. Before it was billions, and that was a big number. Now we don't even flinch when we hear trillions, and that's very concerning to me, because in a way the concept of money has lost its meaning to us, really, and that's a very dangerous scenario to be in. Another thing I want to point out, as I'm sure everyone's aware, everyone's looking at the stock market, right? The Dow Jones. So I have a printout here, and you can see we're going up, up, up for very long, and we hit this very peak, and all of a sudden, boom, we crash, right? Now, I know many of y'all think that the coronavirus is the main reason for that, but I'm here to tell you that it's actually not the main reason. So some things that I'm looking at that most of you don't see is back in 2008, I've studied from some of the best minds in the industry to the tune of about 4,000 hours of study time in on this, connecting all the dots, digging deep into actual financial reports, the New York Fed's site and what's going on being reported there, even though all those numbers aren't perfectly trustworthy. And what I've noticed is we're in the same problem as we were pre-2008. The difference is this time in the 2008 crash, and real quick, a good video or a good movie to watch to better understand that if you haven't is called The Big Short. They do a really good job of helping you understand what the problems were leading up to the 2008 crash and why everything went down the way it was. But just in recap, the reason we had that 2008 crash was because of all the speculation that went into real estate. A home mortgage was supposed to be, back in the day, a pretty boring thing, meant for people that had really good credit, had good jobs, they could afford a home mortgage. And Wall Street, which, by the way, is one big casino, that's all it is. It's a gambling, just like casino in Las Vegas. They got people to gamble on home mortgages. So banks were creating more and more home loans to the best borrowers, and then they're like, you know what? They got greedy. This is not enough. Let's go to the second tier, people. And then eventually, if you just had a heartbeat and could sign a piece of paper, you could get a home loan. It was really ridiculous. And so what this did is all the speculation created this huge, what we call bubble or asset bubble in the price of homes. You had people that kept thinking that homes were just going to always go up in price, so they would buy a home at any price, maybe something that needed a little fixing up. They'd throw on some fresh coat of paint, fix it up, and they sell it at crazy percent increase to the next guy. And this kept going on and on until the very top. There were no buyers left. I mean, in a way, it was kind of like the fundamental principle of a Ponzi scheme. So everyone at the very top were called the bag holders. They held these bad mortgages that were not serviceable. That's the big thing. So whenever you hear debt and debt going bad, it means that it wasn't able to be serviced. So the principal plus interest payment were not being made on those, and so the whole debt package or the whole loan amount was basically it's insolvent. It was no good. So that in itself wouldn't have been a bad thing, except what happened is all these home mortgages all across America, they got packaged up and they got sold into Wall Street as basically debt instruments. And I don't want to get too deep into that because that's not really the point of my talk today. Again, the Big Short goes into that really well. The problem with that, though, was that Wall Street sold these. They gave these really good rating, because of the way they were layered. It said, "Oh, these are good rating. They're fine," and they sold them into pension funds. So people, pension funds, whether that was through the state or a private company that offered a pension, plan, and even snuck them into 401ks as well. And so people didn't understand what they were buying. They just saw a good yield, whatever it was at the time, 5-6%, maybe a little bit higher. And they were like, oh, that's a really good return on my money. I'll buy those. And they didn't know that those were actually ticking time bombs in their portfolios that were going to blow up. So anyways, we kind of, fast forward from that point. So how did we get ourselves out of that crisis? Well, the Federal Reserve dropped interest rates down to 0 and held them there for historically the longest time we've ever seen. Over 10 years now, the interest rates have been at 0. It's called the Fed fund rate. So the cost of borrowing from banks and investment groups was basically, it was nothing. So the moral hazard, whenever it doesn't cost you anything to borrow large sums of money and you feel confident that you can speculate or gamble with it in Wall Street and get a better return, that's exactly what you're going to do. And that's what it encouraged. It encouraged a lot more borrowing, not just on the consumer side. The consumer side was a little tapped out because people had lost their jobs after 2008. So it took them a longer time to kind of get back to break even. But all this happened really in Wall Street. So as you saw over time, the Dow index, fund just kept going up higher in points until, not so long ago, we got all the way up to 29,000 points, right? Now, people thought this was great. Everyone thought the economy is, the best one ever under Trump, no problems. And then all of a sudden, out of nowhere, we're all under here, this quarantine, the lockdown of coronavirus. And all of a sudden, Wall Street, got freaked out. They're like, hang on, everyone is at home, no one's working. All these businesses are basically out of business. Why are stocks still at this level? And all of a sudden, this huge sell-off started, to happen. Well, I saw this coming because I look at indicators, again, that most people don't look at. And one huge indicator that freaked me out was Warren Buffett. We all know his name, Warren Buffett, right? Well, a few months ago, Warren Buffett, who manages, billions and billions of dollars, I found an article that said he had $120 billion parked outside of the market in cash. Now that's very strange because someone, investor like himself who has that much cash, they like to keep it working. They don't like to keep it still and just sitting in cash. It's not earning them, any return. And so I was like, well, why is he parking that much money outside of the market unless he thinks that the market has topped? And, he's a value investor. So he likes to find, good companies at, bargain prices, good price to earning ratios, and he likes to buy them and hold them forever. That's basically been his style or claim to fame. So if Warren Buffett couldn't find a good buy in the stock market, okay, any more value buys left, then I felt very uncomfortable because we were at a very, market top. The other problem, the fundamental problem right now with this market here is, I've done all sorts of trading. I mean, I trade for myself. I've done, I played around in penny stocks years ago, regular stocks, option trading. So I'm very well versed in the concept of, trading and putting on trades inside of Wall Street. And what was really concerning to me about the Dow Jones chart here is it really, really resembled a chart pattern in penny stocks called a hockey stick. So you'd have, prices go like this, and all of a sudden they skyrocket like this. I don't know if you saw Tesla's chart at all. And all of a sudden it hit a very peak point, and it come crashing down. Now, for penny stocks, That's normal, right? No big deal. But when you have companies that are supposed to be blue chip companies, or companies like Tesla that are 100 billion plus market cap, trading chart patterns like a penny stock, that's very concerning, because what that is telling me is there's a ton of leverage, and leverage means borrowing, happening to buy these stocks. And that typically happens at the top of a peak of a bull market as a feeding frenzy comes in, right? People have this fear of missing out because their buddy is making so much money, off Tesla or Amazon, that, they're like, well, I need to gamble too. So everyone, starts getting a brokerage account. They buy these stocks. They don't really know what they're buying. They think they do. They buy the shares. They keep going. Some get even more greedy. So some get margin accounts. So they have a certain amount of money, and then the brokerage account lets them borrow X more dollars on top of that, right? And this happens at all levels. It can be the little guy all the way up to what's called a hedge fund that manages large sums of money. They're all borrowing, right? So hopefully that gives you a little background there. But what we're getting to now is the base currency, and this is where it's dangerous. So I don't know, if anyone follows my Facebook post, which it sounds like 3 people do. So the 3 people that are informed right now know that I like to really give the example of what's going on in Venezuela, right? So I followed the demise of Venezuela for the last 5 or 6 years, and what's very interesting is as Venezuela kept debasing their currency, their stock market actually was going higher. All right, it's very interesting. Their stock market, index went all the way up at some point to 500,000 points. Wow, it's crazy. So anyone in the Venezuela stock market probably thought they were just rich. Everyone thought it was well off. It was great. But anyone who knew better looking in saw that their real economy was in shambles, and it was terrible, what was going on with the people. So unfortunately, kind of the sham is we've all been pointed to look at what the stock market is doing, and we really neglect and we don't see what's going on in the real economy. And over the years, as we all know, more and more production has really shifted overseas. China, right, is the big one. And America really doesn't make anything that we consume anymore on a daily basis, and this is the fundamental problem. So the big thing, the easy example that I can give to you is if you're on an island all by yourself, okay? And the money gods above you, drop down $1 million of paper on you, okay? But you're on a deserted island all by yourself. You don't have any shelter. You don't have any fresh water. You don't have any means to get food, right? But you have all these paper dollars. You're a millionaire. Are you truly a millionaire? Are you wealthy, or are you poor? Well, if you think about it, you're probably poor, right? So that's a small, example here. So the Federal Reserve can dump all these digit credits onto us, into our checking accounts, all they want. But if we are not able to consume the things that we need on a daily basis that we can create, inside of our own country, then we're actually poor, and we're becoming even more poor, right? So the concern I had for the last 8 years is the financial markets, the Dow Jones, the NASDAQ, stuff like that, they were growing much larger than the core economy ever was. And that's why I called BS on this quote-unquote economic recovery, because I knew it was one big, fat, ugly bubble. The danger point now is the bubble back in 2008 was isolated to home loans and home mortgages, right? The bubble here has spread everywhere. You talk about an infectious disease. In my opinion, this is more dangerous than COVID-19 because this has infected everything. It's infected corporation and corporate debt. I'm sure you've heard right now, a lot of companies over the years did stock buybacks. Why would a company spend good money to artificially prop up their own stock price? So that means that they actually go into the market, they buy their own shares, which lowers the count of shares available, which increases the price. However, when a price of a stock usually goes up, it means that the earnings or the profitability of the company are growing. That's a healthy, organic thing to have happen. This is not the case with the majority of our major corporations. Now we see a lot of mismanagement, terrible, unethical behavior, fraud coming, about every day. Like news, it's amazing what's getting, hit with us here by these CEO execs. But Boeing, for example, everyone knows the story of Boeing, right? There was insiders talking about all the fundamental flaws of the 737 MAX, and the execs still let that plane go out into production, and 2 of them went down, killing every single person on board with that. And Boeing's, stock was still holding steady. All of a sudden, it crashed with everything else. Now they're like, hey, bail us out. That's morally wrong. You don't bail out companies that make terrible decisions in running a company and let them, get this moral hazard of doing it over and over again. And that's exactly what the Federal Reserve is doing. But most people think that it's not going to impact them as an individual, right? Again, they think the Federal Reserve has all this money to give out to everyone. They can bail out industries and all these companies, and it's not really going to impact us, the everyday guy. Well, that is false. It's actually going to impact us in a great way. So again, getting down to base currency. Base currency is what we use on a daily basis, right? We've all heard the term inflation. Inflation is a real nice way of saying that your money's secretly getting stolen from you and you don't even realize it. How that happens, though, is in what's called a debt-based monetary system. And the easiest way to understand that, again, is if you have only $1, right, the genesis of the monetary system that we're all going to participate in, the first dollar that gets created into the system, it's fine, no big deal. The problem is when there's a interest rate or debt instrument attached to it. So let's say 10% for easy numbers here. So the first dollar gets into the system with 10 cents interest that attached to it. That's got to be paid back to the entity that created the money. Well, the question is, if you think about it logically, is if there's only $1 in the system, but what's owed is $1.10, where do all the participants that don't get to create the money get the extra 10 cents from to pay back the entity? Think about that for a second. You can't find it anywhere. You don't have it. So what has to happen is another dollar's got to be created into existence, right? And so the scheme goes on to the trillions of dollars or numbers that we're experiencing now. So if you ever felt like you're on a hamster wheel and you can't really ever get ahead over the course of your life, that's the reason. Is because we're on a debt-based monetary system. Now, there have been presidents that have tried to get us off of this and back onto an honest monetary system. And the reality is, inside of the way America was set up, the Constitution and the Money Act, the Founding Fathers actually gave us, the people, the ability to issue our own money debt-free. Okay? I don't want to get too far down the road and explain the history, but a good book in better understanding that is a book called The Creature of Jekyll Island. It's a very in-depth book to read, but it really goes over kind of the whole Federal Reserve and how its charter happened and the creation of it, and how central banking has always been really terrible for countries as a whole. So anyways, as this COVID-19 thing goes on longer, which it seems like it is, we're now getting extended out into April and further. The problem with that is, at some point, where does the stock market end up? Where do companies end up? Does the Fed have to bail out every single company? It might. What is that going to do for you in an everyday living situation when you go to the grocery store to buy the things? Because at some point, massive job layoffs are happening. Small businesses are at risk. I know my business is at risk. There's a lot of people that is completely at risk here. So that was our income, and now all that's going away. Yet we still have more home payments or rent payments to do. You can only delay those for so long, right? You still have a food bill. You still have energy bill. You still have a car payment. You still have gas. You still have all these things that you have on the daily to just get by and your needs, right? Well, more and more Americans are not going to be able to do that, and they're going to fall off the hamster wheel. And so we have unemployment rates going up, sky high. Homelessness and poverty is going up, and we're supposed to be a first world country. How do we fall into this mess? The mess, again, is that they are completely obliterating the base currency to save the few. So these bailouts, again, for the top tier companies like the airlines and Boeing, there's more than just them. There's going to be, the next one is the oil companies. Because American shale oil, they're only profitable at higher levels of price per barrel. So now that oil is down at $28, $27 a barrel, they're losing money like crazy. And again, most of their operation is leveraged or borrowed money from the banks. So it's called systemic risk. If one bank over in Europe fails, it potentially could domino affect other banks here in the United States. A big ticking time bomb for a long time has been Deutsche Bank, the central bank in Germany. And it's because of what's called their derivatives books, based on their actual cash reserves that they have on hand. So that means, when you set up a banking account, you go in there and you have a checking and a savings, right? Checking is supposed to be for the transactions on a monthly basis, and your savings is, whatever you can save. The problem is what you're saving in, again, is your base currency, the dollar, right? So not so long ago, people might not realize this, but your bank actually, for your savings account, would pay you 8%. All right, 8% just to put your money in a savings account, no risk in the stock market. Just put it in a savings account, and every year you'd make 8% on your money. Here's the danger. Most people don't realize that we have all these pension funds that all these baby boomers who are about to retire are depending on. Is that whole pension fund is tied up in the stock market. And in order for those pension funds to remain what's called solvent, that means being able to pay out the money that's owed, the obligation that's owed to these people who are getting ready to retire, they have to maintain at least a 7% yield. All right, so that money in that fund has to be generating 7% annually in order to pay out without draining down the principal. Well, we know that that wasn't the case for the last 8 to 10 years. So the chase for yield from these pension funds, they went into more riskier and riskier investments. Okay, now that's popping on them because of everything that we're all going through right now. And the bad news is, I think that really the game is over. And why I think the game is over is because the Federal Reserve, the emergency measures that they have done, they did not even, it's pales in comparison to what they even did in 2008. So the Federal Reserve is monetizing or buying all this debt that's unserviceable, and they're just offloading on their balance sheets. But it's a not working debt instrument. It's dead. It's zombie. It's a zombie collateral. It's dead. So they gave this cash to this other company for crap loans basically that aren't working anymore, and they just created more currency into the system, and it's going to keep going and going and going, right? Well, people are like, well, how is this going to really impact me? Well, at some point, our trading partners, see, it's all about trading partners, right? If we don't create the things that we need to consume inside of this country, we depend on other nations to buy it from them, basically. And China, we relied heavily on China for everything. You look in your house, everything you have, pretty much is made in China, right? So America, for the longest time, had this unlimited credit card, it seemed like, where China would just keep sending us all the stuff we need, and we were just giving them, IOUs, basically. That's all it was. Because the trade deficit was, still very, very large. We were not giving enough things in equal exchange. So to balance that out, we said, hey, we owe you, down the road, whatever. However, that's not happening as China realizes that we're never going to be able to pay them back. And so at some point, the generosity, if you will, is going to get cut off. I mean, it's just normal business. I mean, if we were trading, and you were just giving me a worthless piece of paper, but I was giving you real stuff, at some point I'm like, hey, this isn't cutting anymore. I'm not going to give you the real stuff. I need you to give me something in return. Well, because we don't have a solid manufacturing base in this country anymore, and producing, things that we need to consume, we're kind of in a pickle here. Because it's not something you can just snap your finger and say, okay, we're going to start making everything that we were used to buying from China. There will be a lot of deficits at some point, and it really depends how quickly we can ramp up. The other thing that's a problem is most people think that government can solve this problem. Government can't solve this problem because government doesn't create or produce anything. We, the working class, create the economy. The government actually just takes our productivity. In the form of taxes, regulations. I mean, you know this. I mean, up the wazoo, we get tax up the wazoo. Everywhere you go, there's a tax, right? So government only takes productivity. It can't give anything back to you. Go back to the example on the island, right? The money gods dropping the money on you doesn't help your situation. Only you can help your situation. So you'd have to go out, learn how to fish, right? You start there, you cut down some trees, if you can make a stone, makeshift axe, right? You're trying to build your shelter. It's all you that's helping, you get out of your predicament, not the money gods dropping more, paper onto you. So I know I've had some, little debates on Facebook, people that think, well, the Fed just needs to print even more money to solve our problems. Actually, that's going to make the problem worse. So, summary here, and again, if anyone has questions, I'm willing to hop on a Facebook Live, and we can talk about it if you have questions. But what is the solution? Jonathan, you told us that, all these problems, and people want to know, what is the solution? Well, the solution is Dr. Ron Paul, who wrote a book called End the Fed, actually gave a great solution. He said, why don't we have a competing parallel currency that's backed by gold? Now, it doesn't have to, gold has been money for thousands of years. For some reason, instinctively, people trust gold as money. All the people of other nations are flocking to it right now. America is always kind of the last to get on board. Americans, for some reason, never really understood gold because it wasn't taught in public school, education system. We were taught to just believe in the almighty dollar. It'll never fail you. And so people don't understand what real money actually is. However, there are many people across the world that actually do still understand that, and they were flocking to gold, right? Well, gold is money. Gold is actually a very, very liquid, market. And as we found out with some of these margin calls happening in the stock market, that they're actually pulling liquidity from the gold market in order to pay off their margin calls. So, anyways, back to what Ron Paul was talking about is let a parallel currency float right next to the Federal Reserve, and let the people choose where they want to conduct their transactions and their savings in. And eventually that will balance out as more and more people realize that their base currency is getting eroded away and they don't have as much purchasing power in the dollar. Well, anytime they earn the dollars, they're going to transfer over into the other currency that is actually protecting their purchasing power. It doesn't have debt attached to it as well. Eventually, everyone will just shift over into the new currency that's working better. Okay. However, they're not going to let you do that. Because the strong arm of the government mafia and the strong arm of the military, they're going to force you to remain in this dollar system because they have a monopoly, right? Why kill a good thing? So that is the stranglehold that is currently, happening right now in a very big way. I mean, I would say compared to 2008 financial crisis, what lies beneath the surface is well over 10 times worse. And I know it hasn't manifested in its full, vengeance just yet. But it will over time. As Wayne Gretzky said, I don't look at where the puck is at right now. I look at where it's going, and that's kind of my same philosophy when it comes to the markets and economics as well. So I think that's long enough for the first video. I hope you all got something out of that. Again, I'm willing to make more videos on the topic or hop on a live stream and answer questions as well. But yeah, thanks for listening. Bye.